All right, in terms of property repairs, Julie, this comes up every year. So we're going to talk about basically costs in running and managing a small little property business that you're operating there. So expenses is incurred that counts. So this is something that you mentioned in one of your notes to me. Why is it important in terms of the period that it's incurred that accounts, and why is it important to potentially get a quote before 30 June?
Okay, because we're really back to looking for every deduction we can now. So in a little while we'll discuss when it really is a repair, but let's just assume we've got a repair or we've decided we're going to repair the place, but everyone's doing it. You can't get the trade in. As long as you get the quote and accept the quote, and so you've told them to go ahead, you've incurred that expense. You mightn't have paid it, but you've incurred it because you're going to have to pay it one day. And on that basis, you can claim a tax deduction now for it before the repair takes place.
Well, I think that's a little bit of gold there. So a nice little clue in terms of how you can prepare over the course of these coming 7 or so weeks before we hit 30 June. Now, there's a lot of misconception and something that the ATO released, last week in a press release, talked about 9 out of 10 investment property claims are incorrect. And I think a lot of it has to do potentially with how we treat money that we spend on the property. I think a lot of investors just think that I'm running a small business, so anything that I spend on that property has some form of tax deductibility for me, but it's not always the case. There is definitely a distinction between improvements and repairs. And so can you just share with us why that distinction is so important in terms of whether it's claimable or not claimable, Julia?
Yes, well, you shocked me when you said 9 out of 10, because we certainly don't experience that, Ben. It's not nothing like that.
No,
so
it did surprise me too.
Out there. But so the only thing I can think of where it's a bit of grey area and inexperience might make people vulnerable is sorting out the repairs from the improvements from the replacements in its entirety. And as you know, we have a particular worksheet that eliminates that. But if in some cases, they may bring into their accountant a whole bundle of receipts and say, yeah, I did the repairs, here you are, and they might just be put in. Or some people prepare a spreadsheet for their accountant and just list it as repairs. They say, that's it, trust me. So I can't imagine that anything other than that somewhere in there, the ATO is finding one little receipt or one receipt's gone missing. But anyway, to explain the difference. So a repair, most people, and this is the classic way, people say, oh, but it needed repairing to bring it back to what it was when it was brand new. But that's not a repair. It's only when you bring it up back to the condition it was in when you bought it. So if it needed painting when you bought it, that's an improvement if you paint. So you can't claim that as a tax deduction. Just pop that in your depreciation schedule and write it off over 40 years. But anyway, so did it improve the property beyond what it was condition it was in when you bought it? Then no, you don't get a tax deduction for the thing. Now, if it was your home before you did when you bought it, and then later it needed painting, but you went and rented it out for a couple of years, and finally you painted it, well, just because it became necessary to do the painting in the year you lived there, it doesn't matter. You owned it at before it became necessary to paint it. So as long as it's rented the whole year you paint it, you get the deduction for that painting. Okay, another thing is to use materials that are better than what was originally there, such as replacing a tin roof with tiles and stuff like that. But you are allowed to use, you wouldn't go trying to find old copper pipes instead of using PVC or something like that. You are allowed to use modern materials. You can't improve it beyond too much, beyond that, just what the modern equivalent is. So the next one, is another example of a tree, removing a tree. That's a good example of a repair, isn't it? So it's an improvement if the leaves, why are you removing it? If you're removing it because the leaves are clogging up the gutters, then no, it's an improvement. If the leaves have always clogged up the gutters, you're improving it by removing the tree. If during the time of ownership, the roots got into the pipes, then removing it is a repair. But if the roots were already in the pipes before you bought it, it's an improvement to remove the tree, and so it goes on. Okay, but there's some weird stories. There's and these are ATO rulings where they've said to remove the carpets and polish the existing floorboards was considered a deductible repair. Yet underpinning due to subsidence was considered an improvement. Now, so go figure.
Well, that probably comes back to was the house subsiding before you bought it, and hence that continuation. The other one that's also really important that you also like to share is the one about some part of the original component or structure being left behind. Can you talk to that story?
Right, well, this is the issue about replacement in its entirety. So we've got to make sure it's a repair, not an improvement, and it's not a replacement in its entirety. So to replace something in its entirety, there's nothing left of the original. You've got to have the original still there to have repaired it. So the walls of the house are part of the entirety of the building. So if you replace the whole roof, that's all right. That's a repair, assuming everything else. It's not a replacement in its entirety because there's no way that roof could exist without the walls to hold it up. Okay, so the house is the entirety. But the kitchen is an entirety in itself. You replace the whole kitchen, then it's not a repair. But if you took the cupboard doors off the kitchen and put modern ones on, that's a repair. So you like that one, don't you?
No, I do like those because I've seen both done, and I've got a situation with one particular property at the moment where we've had a lot of hidden water get into the back, and it's rotted the sort of back parts of the frame and the cabinetry in the kitchen. So we're going to have to obviously do an insurance claim, and potentially to make it safe and for quiet enjoyment, we're probably going to have to rip the kitchen out and put a whole new kitchen in, as an example, because of that water damage that's sort of been hidden from eyesight. But that's an example where it's obviously I'm changing the whole kitchen unit. Is that a repair or a replacement because I've had water damage in that property?
Well, you're going to get insurance claim, you told me.
Yes, we're hoping to get an insurance claim.
So you're going to undertake the repair.
That's right. So we're not paying for it, so it's not a cost. Yeah.
Well, that's the trouble. If you're replacing the whole kitchen, the insurance company's going to be paying for it. Get the insurance company to pay for the replacement. Don't give you the cash, because then you've got the problem. Right? But if you're... Yes.
Yep.
Okay, so you don't have to split hairs over this. Just say to the insurance company, go right ahead, get your tradies in, do what you're going to do.
Yep.
Right, so, but also if you're not going to do all of the repairs, you get the cash from the insurance company. And if they are repairs, like you're saying about the boards at the back and that you've got to replace, you say, I'll claim a deduction of $10,000 for doing that. I've got $40,000 from the insurance company. I have to include as income only $10,000 to offset that because it's recouped. The other $30,000 that I haven't spent just comes off my cost base. So basically, you got the money sitting in your favourite place, the offset account instead.
Very nice. And in terms of the interest excess, the insurance excess, is that deductible if I have to pay an excess?
Yes, but I'm thinking that yes, if they're going to replace it, you'd have to pay it. But when it comes to an insurance payout, they normally reduce what they give you by that. But yes, going back to the idea of get them to replace the kitchen, yes, you would deduct the excess. Yeah.
Okay, so a couple of ideas there that we've seen come out. So obviously that whole area of what is a repair, what is an improvement, what is a replacement, and what would form part of the capital cost. So another classic examples, which we're going to move now to